Hey, welcome investors to the 40 Finance channel. My name's Jeff Beers. I recently purchased some shares of Rocket Companies shortly after their IPO. And one of the most common questions I get on this channel is how do I evaluate a stock and what do I look at before I decide to buy? So I thought I'd take the opportunity with this recent purchase of Rocket to kind of go through what intrigued me about the company and show you sort of what my mindset was. Reminder as always that my stock picks and projections are just my opinion for your entertainment. Please talk to a financial professional before investing in the stock market. But for those of you who do understand the risks of the stock market and love to dig into stock analysis and personal finance topics, then please subscribe to the 40 Finance channel. Thank you to everybody who's supported the channel so far. All right, real quick, let's kick things off with a brief summary of where the stock is at today. $20.14 is the price. And you can see that this is an IPO, so we have no PE ratio, we have no EPS. The next earnings date is September 2nd, 2020. And the 52-week range, which is, basically August 3rd through today, runs from 1750 to 2685. I got most of my shares. I think, some of them were under 20, some of them were over. But at the end of the day, my cost basis is slightly under $20 at 19 and some change. All right, so coming out of the gate, the interesting thing is the Rocket IPO was kind of quiet. As a matter of fact, I knew that they were going public, but I forgot the actual day until later that afternoon I saw a headline about it. So I was excited because I could still get in at a price that was very similar to the opening price. However, there were analysts that thought the stock was too expensive for an IPO and didn't have much room left to run. And frankly, I would say that Rocket did a basic job of talking about the future and really selling their pitch for the company through the S-1 filing. It's interesting, if you go to their investor relations page, there is no traditional PowerPoint presentation. There's a couple of press releases and a general overview of the company, but they didn't really illustrate the big win here with investing, and I think that was probably a miss on their part. However, one thing that they did do shortly after launching, a few days after, I think it was last week on Thursday or Friday, they came out and they disclosed how their earnings were looking prior to their September 2nd earnings call. All right, and if you take a look here, they talk about just in advance of how things are going, and it all looks pretty good. We will focus just quickly on the yellow lines. Rocket expects net income of $3.5 billion after a loss of $54 million in the same period a year ago. Revenue is expected to climb to $5 billion from $938 million a year ago. And then last yellow line, their closed loan originations volume of $72 billion was up 126% from a year ago. And this is just kind of the tip of the iceberg of what intrigues me with Rocket, and I'm going to go through those points right now. But the bottom line is, with these low interest rates here, we have an incredible opportunity both as homeowners and as businesses to capitalize on the demand to convert over to lower rate mortgages. All right, so reason number one that I invested in Rocket stock was because I'm a customer and I am familiar with most of the tools that they have at their disposal. This is actually a snapshot of my user dashboard. I took the liberty to get rid of all my personal information on here, but there's nothing particularly special about this screen, except that I will say within this Rocket Mortgage dashboard, you are literally 2 clicks away from everything you've ever wanted to know about your mortgage, including the original contract, escrow information, sort of like a Zillow-esque review of your house and how much equity you might have. But as cool as that is, I would say that honestly the biggest attraction I have with Rocket has just been streamlined processes, customer service in the sense of helping me navigate questions and also examine potential offers to lower my mortgage. It's so fast. Any nightmares you have, let's say about buying a car at an auto dealership and the way that paperwork flows, you would be very impressed with what Rocket has on tap anytime you make an inquiry, whether about a new home loan, selling your existing loan, or refinancing. The answers come quickly, and it's relatively easy to do online. All right, so in the next couple screens, I'm going to talk about the other reasons, besides just being a customer, right, of Rocket. What are the other reasons that intrigues me about this company? Just being a customer isn't enough. Having a good customer experience is nice, but we do have to talk about growth, and we do have to talk about opportunity. And just real quick on this slide, which is from their investor relations page, one of the few resources that they actually have available is their couple 3 sentences about, their quadrants of growth. Right off to the left, accelerating market opportunity. We're at the center of the largest consumer asset class. That all makes sense. Not mentioned there, but of key interest to me is what low interest rates do for that largest consumer asset class. Looking off to the right, I highlighted the 2 things. The digital first brand. We all know how important that is in today's world. The idea of going to fill out paperwork at your local bank is literally mind-numbing at this point. So it's great that Rocket is fully ingrained on the digital side. And then lastly, at the bottom, multiple drivers of profitable growth. So not only are we trying to grow the core business, right, which is like refinance loans, but they have a lot of other irons in the fire, turning around into like a title business, buying smaller players like, insurance companies and such, so they can process more services and take more profit. These are all things that are in the pipeline for Rocket coming down the line. All right, so in terms of opportunity, this is really the big sell with me in Rocket is, first of all, you have a major player in the space, one that I happen to be familiar with, but they are a big time player in the refinance market. So let's look at that opportunity a little more closely. This information here is from Black Knight, which is basically a market analysis firm. They go into the current mortgage environment. I've highlighted a few things here. We'll go very quickly. At the top, tappable equity rose 8% annually in Q1 to an all-time high of $6.5 trillion. With mortgage rates hitting record lows, 90% of homeowners with tappable equity now have first lien rates above the prevailing market average, aka they're paying more in interest today than what is available in the market. And look at that last point, more than 75% have rates above 3.5%. So we're starting to get to that magical number that everybody can figure out, which is if you get a refinance lower than 1% of your current mortgage, you are probably going to want to take advantage of that opportunity. Third bullet point there, Q1 also saw overall refinance originations climb to a 7-year high. So refinance originations are up, but at the same time, the number of cash out refinances as well as the volume of equity withdrawn fell for the first time since early 2019. Even though some of the originations are up, you still have yet to see people piling in to these refinances despite having most of them over a 1% advantage. Last point on this slide, you see down there 13.6 million this is homeowners, who have broad-based eligibility criteria and could also shave 0.75% off their current first lien rate. So, give or take, this market is 13.6 million people who could conceivably make an easy case to refinance. All right, so that's the opportunity from the market standpoint. We remember, if you go back to the slide where Rocket talked about their sort of ecosystem, now we're going to talk about what ways do they have to spin up new revenue, not just grow existing, but spin up new. That's always important. Let's take a look. Okay, a lot of text here, but we'll try to go fast. This is from the S1 report, which is basically their filing for an IPO and what they want to convey over to investors. and you see I highlighted some boxes. We actively created a number of businesses and markets where we believe our core strengths will drive success, including AmRock, leading provider of title insurance services, property valuation, and settlement services in the country. AmRock uses technology that integrates seamlessly with Rocket Mortgage. Okay, so that's the play on making more money through title insurance, property valuation, settlement services. Bring that stuff in-house. Don't pay referral fees out to people and just save the money for yourself. Number 2, Rocket Homes. This one I'm going to make short and sweet. This is basically a Zillow clone. You can look it up yourself. Rocket Homes, it's exactly like Zillow. So if you're familiar with Zillow, the opportunity is there. And obviously, if you find a home that you like on that platform, you're going to have a seamless opportunity to transition into a Rocket Home application. Works out well for everybody. All right, the third point there, Core Digital Media is basically a social and display advertiser in the mortgage, insurance, and education sectors. Rocket bought this company. They're most known for lowermybills.com, which is a website that they own. They also have some education sites. But the most important thing is that they're a data-driven advertiser because they run leads through lowermybills.com. And basically Rocket's going out there and saying, you know, we'll take your algorithms, we'll take your ROI methodologies, and we'll work it into our own business to improve our advertising and conversion rates. That's a great thing. Plus you sort of get this pseudo third-party website, lowermybills.com, that, you know, you can put Rocket at the top of the search results for, you know, the queries that you align well with. All right, so that gives you an overview of the reasons that I like Rocket heading into this, what their technology does, the way they're acquiring smaller companies so that they can remove middlemen from some of the big mortgage fees and inherit those fees directly. And then you have alternative plays like Rocket Homes, which sort of competes in that Zillow Redfin space for the future, where you say, hey, customer searches for the phone, searches for the home on their phone, and you already have an in to make that mortgage connection. Now, Rocket Homes is going to struggle to compete out of the box against Zillow and Redfin, but there might be some other plays, though, for existing Rocket customers to be incentivized to use Rocket Homes in their home search. All right, so those are the positives. I do want to cover a couple negatives because with any investment, there's risk involved, and there's certainly risk here with Rocket Mortgages. So let's take a look at what some of the critics say. All right, I grabbed a couple sections from two, I guess I'd say, bear cases. This one from Forbes. You can see this headline, if you will, from a larger article. Rocket Companies is still dependent upon interest rates. I think this makes sense to everybody, but they did a good job of writing it up. No amount of automation and efficiency could remove Rocket Companies' dependency on low interest rates. That's pretty obvious. And then at the bottom, the latter is more important to Rocket Companies' business. Only 27% of the firm's originations in 2019 were to clients purchasing a home. So that's really important for you to understand if you're going to jump into this company. We're basically talking about having 73% of their mortgages are refinances, right? So that just means that there's two ways to look at it. They only got 27% actual originations. So you can say growth opportunity or strike it as a negative. Depends on how you want to look at it. You can make a case for both. I say opportunity. And I know that the refinance base that we saw out there is super strong. So while we're learning to get into that new home origination, we've got time because this refinance machine is chugging right along. All right, next up, I pulled some quotes from Motley Fool, who did a great job of comparing Rocket to PennyMac Financial, which is obviously one of the largest mortgage companies in the country. PennyMac originates about 81% of what Rocket does. So Rocket is bigger than PennyMac. Rocket is more profitable. You see in the second line that's highlighted. Rocket is more profitable, however, earning net income of 0.62% on that volume versus PennyMac, which earned 0.33% of volume. This means Rocket's net income is just over twice what PennyMac earns. That's going to come in handy as we scroll to the bottom. Second highlighted box. Look at the valuation difference. While Rocket earns twice what PennyMac earns, its market cap is over 10 times PennyMac's. Rocket trades at a PE of almost 50, and for a financial stock, that is gargantuan. And you see that they have this little box here where they've put together the 2019 numbers and how it all shakes out. You got PennyMac at a 10, Rocket as a 48. All right, so good job, Motley Fool, on the 48. I'm going to say right now, though, I disagree respectfully because you're using 2019 numbers. When we scroll back to the beginning of this presentation, Rocket did that pre-earnings disclosure where they talked about revenue being up, 100+%, billions of dollars better than they were same quarter last year. So when you're looking at 2019 numbers to come up with your historic valuation, yes, PennyMac wins. When you're thinking about today and how the world has moved on to lower interest rates, I think that these numbers are kind of dinosaurs at this point. All right, so let's put it all together so that you can make the best finance decision for yourself. On my end, the Bulls, which is me, says 24 months of incredible opportunity left with low interest rates. Fed Chair Powell has basically guaranteed us 2 to 3 years of super low interest rates, and that is on the record already. So nothing but good times on that front. I put proven digital model of Rocket to compete with the increased demand. With increased demand will likely come increased competition. I'm glad that they have a digital model that can compete with that. Additional revenue streams with services and the Zillow clone. We talked about how they're building up other ways to make money. That's encompassed here. And lastly, as I just mentioned, the 2019 valuation comparison to me is almost irrelevant based on the recent earnings preview. On the bear side, you got the Motley Fool with current PE of 48 based on the 2019 numbers. Definitely not a strong PE number for a financial stock. Then, of course, growth is tied to interest rates and the economy. Both of those bull cases could collapse at any time. And lastly, depending on how much it matters to you, it's important to know that Rocket is mostly a refinance play today. And you'll have to assume so for the rest of this year until they get that home origination business going. All right, bottom line, those are the things that I looked at when I decided to buy Rocket Company stock. You can see why I'm positive on it, but like every other stock in the world, it doesn't come without risks. I plan to be in this one for at least 2 years. While interest rates are low, I may try to bail before those go back up because we know that volume will go down. But right now, I feel really good. I think everything's valuated at 2019 levels. I see 2020 as a whole different game. For me, I'm in every day under $20 for up to 10% of my portfolio. So right now I'm in at 19 and some change. There is some room for me to add more and not cross over 10%, but any day I see it under 20, I'm likely picking up a few shares at the bare minimum. All right, investors, hope this video was helpful getting inside my brain on this Rocket stock. Let me know in the comments. Please subscribe to the channel if you haven't already. Definitely helps out on the YouTube side. Thanks to everyone for their support. We'll see you on the next video.